I'm gonna explain about introduction part. Number 1. Accounting is essential to modern business because it offers a structure, method for guarding, evaluating, and understanding financial data. Next, it includes a variety of tasks like financial reporting, making decisions, and following to legal obligations. Then, in order to better understand the value of accounting in the business world, this paper will focus on how it helps to provide financial stability, facilitate effective decision making, and promote transparency and accountability. And the last one is this article illustrates how accounting acts as the foundation for long-term business growth and success by examining fundamental principles and practice and providing relevant instances.
Okay, now I'm going to continue. My name is Aminata Huda binti Muhammad Hafiz. My metric number is H23A2317. So I'm going to explain about the statement of profit and loss and the balance sheet statement for 1 month at Noah Retail Enterprise. Now, I start with the first one, the statement of profit and loss for Noah Retail Enterprise. As you can see, the statement of profit and loss for the month beginning on 1st October 2020. So, the meaning of profit and loss statement is financial statement that summarize the revenue, costs, and expenses incurred during a specific period, usually a quarter of fiscal year. The P&L statement is synonymous with the income statement. This will provide the information about a company's ability or inability to generate profit by increasing revenue, reducing costs, or both. Some refer to the P&L statement as a statement of profit and loss, income statement, statement of operation, statement of financial result, or income earnings statement or expenses statement. As you can see here, I list up the statement for profit and loss for Noah Retail Enterprise. So we start from the sale. We get 15,000 and we need to minus the good return, which is 5,000. So to conclude, the net sale is the revenue we just sum up with the 10,000. Next, we need to minus the cost of goods sold. So we have purchases of 25,000. So from the net sales, here we minus 25,000. Okay, then we need to minus 15,000 for the gross loss. Next, we need to minus the expenses, salary, paid account, stationery, and interest account. So here we minus all 4 expenses here, which is 15,000. Next, we need to plus income received account of 4,000. So we get our net loss, which is 26,000. So, last but not least, I'm going to explain about the balance sheet statement. So, the balance sheet provide information on a company's resources, asset, and its resource of capital, equity, and liabilities. This information help an analyst assess a company's ability to pay for its near-term operating needs, meet future debt obligation, and make distribution to owner. So for Noah Retail Enterprise, we list up the current asset, current liabilities, non-current liabilities, and net loss based on the balance sheet statement at 1st October 2020. For current asset is cash, dash account, and my account. We total up the cost and the total current asset is 131,000. Then the current liabilities, which we need to minus from the total of current asset. So you can see from the slide, from 131,000, we need to minus bought good, car, sold good account, and also bought account to get 83,000. Next, we need to minus again with non-current liabilities. We have loan 12,000 and the working capital is 36,000. So the total is 51,000. So last, finance by capital balance at 1 October is 80,000. So we have net loss 26,000 and personal use account 3,000. So the total both is 29,000. So the end total balance sheet statement is 51,000. So that's all from me. Thank you.
Hi, my name is Muhammad Amshar bin Muhammad Saidi. So, for the usefulness of the statement of profit and loss, so a profit and loss statement or P&L is a financial statement that summarizes expense, income, and expense incurred for a certain period of time, and usually a quarter of a fiscal years. So the statistic reveal a company's potential to make profit via increasing revenue, decreasing costs, or both. Profits and loss statement are used to assess the financial health of the organizations. And a profit and loss statement is one of the three financial statements in business plan that displays how much profit and loss that the company made. So similar to be a cash flow statement, the profit and loss or income statement will gradually delay change in account over a certain length of times. So on the other hand, the balance sheet is a point in time that displays the company's asset and liabilities. Because an organization using the accurate method of accounting might record the revenues and expense prior to the transfer of cash. So it is crucial to compare the cash flow statement and income statements. This document is formatted generally as the example below illustrates. Start with the entry for revenue. Also refer to as the top line, and deduct operating debts, interest, and cost of goods, sold costs, among others, the cost of conducting companies. So the variations refer to as the bottom alignment. And comparing income statements from various accounting periods is crucial. So this is because over time, change in net earning, operational expenses, R&D investment and revenue have greater significance than change in the statistic alone. For instance, a business may have consistent growth in its sales, but its change in the statistic alone. Its expenses may increase considerably more quickly to enhance investor assessment of companies. For instance, it can become clear from during this that one business has greater development potential and is more adept at controlling costs than the others. So a profit and loss statement is one of the three types of financial statements prepared by companies. So the other two are the balance sheet and the cash flow statement. The purpose of P&L statement is to show a company revenue and expenditures over a specific period of time, usually over one fiscal years. So investor and analysis can use this information to assess the profitability of the company, often combining these information with insights from the other two financial statements. So for instance, an investor might calculate a company returns on equity or ROE by comparing its net income on profit and loss statement to its level of shareholders' equity as shown on the balance sheet statement.
The usefulness of the balance sheet statement. The asset, liabilities, and owner equity of a corporation are shown on its balance sheet, which is often referred to as a statement of financial condition. Balance sheets are accurate records because they inform entrepreneurs like you about the state of your company finance. Balance sheets are important since they let banks know if your business is eligible to additional credit and loans. What is important of balance sheet? Balance sheet important to decide on long-term commercial matters. You may solve a number of minor issues and prevent more financial difficulties by keeping a balance sheet. Component of the balance sheet. Asset equal liabilities plus equity. Asset equal liabilities plus equity. There are two components of asset. The first is current asset. These are assets that are expected to be converted into cash or used up within 1 year. The second is non-current assets. These are long-term assets with a useful life of more than 1 year. Next is liabilities. There are two components of liabilities. The first is current liabilities. These are obligations that are expected to be settled within 1 year. Second, non-current liabilities. These are long-term obligations that are not expected to be settled within 1 year. Next, I want to talk about shareholder equity. Shareholder equity, also known as stockholders' equity, owner equity, or shareholder fund, represent the residual interest in the asset of a company after deducting its liability. The difference between a profit and loss statement and a balance sheet. The first is purpose and focus. For the profit and loss statement, also known as an income statement, the profit and loss focus on the company revenues, costs, and expenses over the specific period. For the balance sheet, The balance sheet provides a snapshot of a company's financial position at a specific point in time. Next, the difference between a profit and loss statement and balance sheet is a time frame. For the profit and loss statement, cover a specific period such as a month, quarter, or year and show the net income or net loss for the period. For the balance sheet, represent a single point in time, usually the end of an accounting period.
My name is Muhammad Atib bin Azmi and my number is H22A1288. So now I want to present a conclusion. In conclusion, accounting is indispensable for business, with the statement of profit and loss and the balance sheet serving as crucial tools for financial analysis and decision making. It enables accurate financial assessments, cash flow monitoring, regulatory compliance, informed decision making, investor attraction, loan procurement, and stakeholder transparency. The income statement reveals revenues, expense, gain and loss aiding in revenue analysis, cost identification, profitability, and measurement, and eventually evaluation. Meanwhile, the balance sheet offers a snapshot of a company's financial standing and enabling assessment a short-term obligation, asset liability, structure, and financial ratios like debts to equity, including discussion on investment financing and capital allocation. Thank you.